I'm on the line with Rich Riker, who runs a student management investing group, and we are going to talk about Koyfin and some of the functionality there today. So let me share my screen here. We're going to focus on today maybe some basic functionality. In particular, Rich wanted to focus on ETF analysis and kind of what functionality Koyfin has for ETFs. So what would be helpful, Rich, if I give you kind of like an overview of Koyfin, or what have you played with around already?
I've started playing around with some of the screens and analysis.
Yeah.
Um, the current investment portfolio, because the students are new at this, are in 10 of the 11 S&P sector equity sector spiders, which you have on the screen,
Yep.
which is helpful. So I can do some monitoring of the data with those. We're trying to get away from a concentrated S&P 500 portfolio. So I've had them out looking for small cap, mid cap, growth, value, maybe some equal weight, maybe some stuff in the emerging markets, kind of larger ETFs. They have some parameters that they're supposed to stay in. So that's kind of where we're headed with our analysis.
Mhm. Got it. Okay. So it's basically kind of like a top-down valuation, macro thematic analysis, but ultimately expressed in ETFs.
Yes.
Got it. Okay. Cool. So we have basically the three parts of Koyfin are um, the first part are these dashboards where we organize the data for you to browse the market.
Okay.
So a good way to understand kind of what's going on. The second part is the individual security analysis, which is down here. And the
Yep.
third part is kind of creating your own watch list or dashboard up here. So those are
Yep.
kind of the three things. So in terms of, I think for your students, obviously this homepage is helpful to understand what's going on. But really digging into understanding kind of like what are the drivers of the market at the current moment.
Yep.
And so what I like to do is look at stuff on like a 1 year range and really understand kind of like what's on top here and what's down here and why is that the case, and is stuff reversing or continuing, right? So
Yep.
we obviously have this. Uh, we're in this paradigm right now where we had a huge risk off environment. We're back risk on. We're almost near the top. So for me, it would be interesting, kind of like what are the stocks or what are the indices that are outperforming year to date, and can that continue? So obviously here, China, Nasdaq, some of the biggest outperformers year to date. So that's kind of like a interesting theme to think about, and then express it in your own portfolio, or in your own security selection. The other things that could be interesting here are on a country or ETF level, to the extent that your students would trade actual country ETFs. We have that here. So if they want to express a view in China, they may want to think about some of the uh, let's see, do we have, Asia Pacific, some of the China, Hong Kong ETFs over here.
Yep.
So
Yeah.
we have those listed here, and interestingly, you could see EWH here, almost making a new high. And
Yeah.
actually,
Yeah.
this 52-week range kind of tells you like it's trading at its 52-week high, which is really bullish.
Explain the reference on the green red bar, just so I can
Yes,
know what I'm seeing.
yeah. So this Reed Graham bar is so what this so the marker kind of tells you where it is in the 52-week range.
Okay.
And the red and green is the percentage of the time the ETF here was down versus up over the past year. Okay. Um, the next one is would be really kind of interesting for your students in terms of how the sectors look. Similar sort of analysis, so you could sort by different things,
Yeah.
um, and then the subsectors as well. So that's kind of interesting in terms of the subsectors. This other interesting thing here is this matrix. So what this matrix tells you is if you were long this sector and short this sector, this is the performance you would have, right? So quickly,
Okay.
like looking at this little magic carpet, you see that owning real estate has been a really, really good trade over the past year.
Yeah.
You could
Versus yeah.
versus everything, right? And so then you could say like, well, why is that happening? Well, obviously 10-year yields are going lower than anyone had expected. So that's been a really, really good outperformer, right?
Yeah. Last year we do the rebalance every spring. Last year, the students made a basic analysis that industrials and materials we were going to have a good, better economy because of tax cuts. They thought interest rates were going to go up, and so they were underweighted. They had the minimum weighting in the utilities and the real estate sector, so they missed the performance for those two. and they upped financials because they thought financials with the spread associated with the interest rates going up would start to actually rally. So it was kind of an interesting year to kind of look back at when that's what we did. We looked back at where they had their analysis and then look back at the returns. And so this would help with the students visually to get that same picture.
Yeah, yeah. So I think most people last year were in the same boat in terms of not seeing the growth slowdown that occurred,
Yeah,
and
yeah,
especially obviously the market sell off in the fall.
yeah.
But it's just a really interesting post mortem in terms of like what happened and how did it happen, stuff like that.
You can get it visually. And with students that are having, that are not have the basic understanding of a lot of the financial aspects and things, to see it visually, I found it to be very, very helpful to kind of get that aha moment and get past some of the. I actually have 3 international students in the program this year, so it's interesting that the experiences that they're bringing, and particularly in the when we see what they come up with some of the picks.
Right. Cool. Awesome. So and then you could also obviously change this over the past
Yeah.
year to date. So obviously, year to date, the picture looks a little bit. Actually, real estate obviously with yields down year to date
Yeah.
actually looks pretty good.
Yeah.
Same thing with tech and stuff like that. So interesting. Year to date is sort of a continuation over the past year.
Yeah.
So this is a really interesting matrix to look at.
So on the sub, go back to that screen one more second.
Yeah.
The what you call subsectors. Now in the GIC structure,
Yeah.
how far? I mean, is that what would be an industry group, or how does that match on the GIC structure?
Yeah, so great. So the GICS has obviously they have a nomenclature that's very specific. So
Yeah.
there's sector, industry, sub-industry,
Yeah, yeah.
and I forget whatever it is. There's 4 levels.
Yeah, no,
The ETFs, so the sector ETFs match up to the sectors, which is
Yep.
great. But then on a lower level, so for level 2, 3, and 4, there aren't really perfect GICS representations.
Okay.
So these are what we call subsectors because these are just ETFs that are smaller than the sector ETFs.
Yeah, they make up, if you take internet and a bunch of semis, they would all make up 100% of the technology. Okay.
Yeah,
I
exactly.
struggle with the students getting that whole GICS thing and then going out and finding sub-industries and sectors. So I pointed to this, but I just wanted clarification on what this represents.
Yep, exactly. So that's kind of interesting. And then you can look at factor analysis here. So I think it's really important to introduce students to factors because it's something that's not very intuitive and it's a huge market driver right now. So basically just understanding which factors in the market are working or not working, and how that impacts your portfolio. So for example, if momentum and growth start reversing and start performing poorly, what does that mean for sector performance?
Yeah.
On the flip side of value, which is trading, you can see here at the bottom, starts bouncing back. What does that mean for sector performance? So this is a really interesting. So you can see here, like right now, small caps are actually near the bottom end of their range for the past 52 weeks. Right. So that's kind of interesting because I think what's important about factors is you don't necessarily need to trade factors, but you should be aware when they're reversing, and when they reverse, they really impact a lot of other things, whether it's sectors or countries or specific stocks.
Yeah, no, it's something where it's actually part of what we're going to be talking about today. When I start getting some of their lists and things, so this will be a nice way to kind of show some of these aspects.
Cool. So the other dashboards are maybe less important to your students. So let's go straight to the ETF analysis. So one of the ways to find stuff in Koyfin instead of browsing these menus is this kind of like top bar. So you actually just like type what you want. So if I want like Apple revenue, I could just type it in there as an example, and it would take me to wherever Apple revenue is graphed.
Okay.
Or if I want like Facebook market cap, I could just type that in, and it would take me to wherever Facebook is graphed. Same thing with ETFs. So if I wanted like SPY, and I hit enter there, I could see all the things that I can look at for SPY. So if I wanted to look at the price graph, I would then load it in here. So now it's loaded, and I could look at these various analyses for SPY. So No, for us, I'd say that there's a couple of interesting ways to look at ETFs. So first of all, I think it's interesting to graph things just on a graph. And you can obviously just add securities pretty easily here. So for example, let's look at QQQ.
Yeah.
And so this is SPY QQQ. But then you could also look at stuff that are cross assets. So for example, if I wanted to add oil here, I could add oil and look at all these three on the graph.
Yep.
The other really interesting and powerful thing to do is look at relative performance. And the way we look at relative performance is with a colon on top. So let's say I look at XLRE colon SPY. So that would give me the relative performance of real estate versus SPY. And I'll just do a G graph there. And so this is the relative performance of real estate versus SPY.
Okay.
Okay. And I can look at that versus US 10-year. Right, and it would sort of show me like what is driving this is driving this trade, right? So really kind of like intuitive way of looking at relative performance, and I could add other things in here. Okay, so that's kind of like one interesting thing to look at. You can also look at the correlation of things very easily. So here I can again look at this versus US 10-year. So you can see how negatively correlated those two things are, which makes a lot of sense and change this window. The last one thing before we get to the snapshot is very easy to look at. GM is the graph performance shortcut, so really easy to just look at.
So those shortcuts GM are the same. You just learn those. They're the same as what's in the drop down, right? I can search drop down to find the same.
Yeah, exactly. So these shortcuts actually, there's some overlap with Bloomberg shortcuts as well.
Okay.
So like GIP is the intraday shortcut of Bloomberg. And the reason we use shortcuts is once you learn the shortcuts, they're a really useful way to kind of like quickly say, I want Apple G or I want Facebook GIP.
Okay.
So once you,
I see. Yeah, I can see that on so they exist on the drop down. You don't have to. It's not a set of commands you have to learn like on a cheat sheet.
Exactly.
It's a faster way to get it. Once you learn them, it's just a faster way to type them in and go.
Exactly. So if you don't know what the correlation shortcut is, you could just type in correlation, and so we'll sort of tell you like, hey, it's GC, but you can select it or type it later.
Okay. Cool.
So it's a pretty quick way. So what this GM shortcut is the performance shortcut. So a really easy way of just looking at how stuff has performed on a indexed or normalized basis, and really be able to like zoom in, zoom out. I don't know if you noticed this camera icon before, but really easy to generate a chart and just download it. So you can just download this graph to a presentation or to an email.
Okay.
Super fast to do that for your students as well.
And then you've got on the right, it's a little. We got the percentages. You got the return percentages based on the time frame over there. Okay.
Yep, exactly. So this is like if you do year to date, this would be the year to date performance of all three.
And then you have them across the top too. Cool.
Yep. Okay, so let's just get into the specific security analysis. So if we look at SPY, and let's look at the snapshot, which is sort of the first command here. So just some basic overview on what the ETF is, some volatility, classification, AUM, leverage, some flows data in here, which is kind of interesting. So this is
I like the fund flow piece. So the student, we talked a little bit about that, that aspect that money's flowing into these. And if you kind of think of the market as a huge tidal pool with different flows and things, money's coming out of certain aspects and into others, and or investments. And so this is something that's interesting.
Yep.
That you can see over the trend.
Yep, absolutely. So this is a great one pager. Another thing that we have is really graphing the fundamentals. And for fundamentals, a lot of times people will think of them as like single stock fundamentals, like revenue and stuff like that. But for ETFs, we actually have a lot of like these fund flow fundamentals. So you actually look at like fund flows for SPY, and you can let's do this as a bar. You could actually kind of like see what's happening on a day-to-day basis. And we're going to be adding functionality to do this on a cumulative basis. But this is a really interesting way to look at if something major happens in an ETF, like a country ETF or a sector ETF, like if we do here XLRE and add fund flows overshadow, just let's see what happens here. So interestingly, not a huge
Not a huge.
yeah, so nothing very clear, but maybe once we add the functionality to cumulatively look at this, it'll be a little bit more interesting in terms of what's
Yeah,
going on.
yeah.
Um,
I was playing with this yesterday when I was trying to go around and just get a deeper dive into some of the functionalities.
oh, cool, cool. And so the other part to highlight is this holdings analysis for ETFs. Um, so this is the stuff that's going to take a little second to load.
Yeah, 'cause it's bigger data.
Well, it's a big data set, but once we fix it, it should be under 5 seconds. But it's kind of like
Yeah, no, it's fine.
Um, so hold on, let me just wait till it loads. So
I was doing this yesterday as well, and I found the sector breakdown and the industry breakdown piece kind of relative to for the students. Not that you can go out and find a pharmaceuticals ETF, but it gets you started kind of thinking about visualizing what the healthcare ETF looks like in smaller pieces, and see, I took the GIC sector and I just took the next the larger breakdowns that comes on the fact sheet from Spiders, and I said, if you look at this page and you see something that's a large section of the, like, pharmaceuticals is a large percent off the top of my head of the healthcare piece, and you see the healthcare piece up a certain percentage, you see these one or two of these industry breakdowns showing up, you're seeing broader strength versus if you're seeing one sector out of one subsector of the larger sector, and you can see really, like, in the financials, the banks might be the bigger driver in the XLF than anything else. So kind of give them an idea to do some investigation within the sector breakdowns, what might be actually causing those things to move the most. So this was helpful.
Yep. So this panel, this dashboard is exactly for figuring out kind of what's driving ETF performance. Because when people talk about ETFs, they'll say like, oh, the ETF is doing this, but underneath the ETF, there's a lot of things that are going on, which in some are obviously the ETF performance. So what this helps you do is really understand what's driving ETF performance. And the way we think about it is the performance of ETF is impacted by two things. It's the performance of the underlier and the weight of the underlier. So
Yes.
that's why. So here we have performance and weight. And so the bigger the weight, the more impact. The more performance, the more impact. And the combination of the two is then adds up to the performance of the ETF. So when we think about it, it's the weight, like in this table, the return. Yep. And what's this actually should be technically called the contribution. So yeah. Maybe we won't teach your students kind of the wrong terminology.
Oh, it's interesting. Up until I discovered your platform, I use Google Sheets, and I can go in and use the little quick codes they give you to, I can monitor the portfolio 20 minutes late. And each one of these sector spiders, I have all the constituents. And so they can, by weight, so they can see that, Apple and Microsoft and Amazon are the bigger ones in their own respective sectors. But what this graph does, this chart with the dots, really kind of sells the whole thing right here. These two ETF holdings and performance versus weight.
Yep.
You get a better visual of the data that you're seeing, that you really can't. You can understand that they're going to be more, but this actually shows the data, which is perfect.
Yep. So what's interesting about attribution is it's additive. So when you add up all the underlying attributions of an ETF, it equals with 100% accuracy the attribution or the performance of the ETF.
Okay.
So it's so you could sort by attribution, and so it's direct. So you could say that over the past year, the spider, the SPY is up 11%. Well, Microsoft has contributed 105 basis points to that. So almost 10% of the sector return has come from Microsoft. And if you sort it on the way down, you actually didn't have huge detractors, but DuPont was the big one. So so kind of interesting. And same thing on the sector side. So over the past year, you have technology that's contributed almost 40% of the return of the sector. and you have materials which have taken away 34%. And so what's interesting is that real estate, although it's up a lot, it's up 21%, it's such a small weight in the sector, it's a
Yeah.
3% weighting, that it hasn't actually contributed a lot. So, to the extent you're benchmarked to the index, this becomes really important in terms of this weight. With
And
your,
we talked about that, that we would have had to drastically overweight real estate to a point where within $100,000 portfolio, it's not, it's an overweighted bet on something. It's not an investment. So to get those, we talked about, how would we have gotten a real boost to the return of the portfolio by adding, by correctly getting utilities and real estate right. So we had to pick the sectors right, but also we would have had to allocate a 10% allocation to get a real return for the portfolio. But
yep.
that was a part of an interesting discussion that we had about the current portfolio and the fact that we missed the sectors, but there's such a small amount that they didn't move the needle one way or the other. Wouldn't have moved the needle one way or the other.
Right, that makes total sense. So maybe like for XLRE, if we do an HDS as the actual shortcut,
Yep.
much fewer names. But then you can see here that like AMT, which is actually a technology stock,
Yeah.
it's
Yeah. The tower company.
it's a tower company, is the biggest weighting here, right? So actually, by thinking about real estate, you're actually like, oh well, actually, I have to take a view on AMT really in some ways.
You have to understand what the holdings are.
You have to understand what the holdings are. So
And the second part of this was we started talking about equal weight. What would an equal weight portfolio of making everything equal do to some of these returns? And we started talking about knocking down the higher ones and then bringing the little ones up. And so they're starting to think about and if they want to be in the biospace, what would be the impact of all those little biotech stocks that are very volatile and taking some of the bigger ones down. So we've had those discussions as well.
cool. Sounds great. Yes. So sounds like you guys are talking about all the important things, or at least the
Yeah.
framework for making the decisions. And what this tool or some of the
Yeah.
functionality will let you do is really kind of have the information to be able to pinpoint the decisions you have to make and put some color behind it.
Yeah.
So I think I think that's the kind of main
You do
functionality.
it 2 seconds on the economic piece because that has been the biggest, and it's the biggest problem because the students have a lack of understanding of the markets, but economics is even worse. So I was using your economic piece to kind of be our data set, just to look at trends and things. Can you do 2 seconds on that? I know you got to
Yep.
go.
No, that's great. So, I don't think I think like understanding economics is probably a longer discussion than we have time for right now.
I have
But
a good friend that has a PhD in economics and worked for Merrill for however many years, and he laughs when I go and ask him questions and how do I present this and how do I get? And he actually, he's teaching now and he's very frustrated with, because he gets it, but he doesn't understand why the students don't like it and get it. So
yeah, and no, I think there's a lot of moving pieces in economics. I also think it's like not a it's not a science. There's a lot of stuff that's like not really understood, so it doesn't always move according to how people think it should. So it takes a little bit of experience to really I'd say internalize it. But with us, we basically have a lot of economic data on the first thing on the macro side. Um, what I would do is really kind of look at these different metrics like GDP year on
yeah,
year and CPI, and really understand where the U.S. is relative to the rest of the world. And so I think that's important to kind of understand
yeah,
where's the growth coming from in the world, and obviously it's coming from India and China still, even though those two regions are decelerating to some degree, but that's still a big
yeah,
driver of world growth. And really understand kind of like where CPI is, where some of the other growth
yeah.
drivers like retail sales, industrial production. With GDP, I would look at the year on year. It's a little bit easier to understand, um, and so just going to load this up, and basically again just thinking about where we are in the overall trend and where's that trend likely to be heading. So
Yeah.
this is obviously the cycle. This is what a cycle looks like. And so we're 10 years into a cycle, and we're here. So the question is, we're definitely going to be heading lower, but the question is how much lower and how fast.
Yeah. That's really, I mean, economics is not my thing either, but just to show them the trend, to take what they're seeing and reading in the newspapers and trying to, I always say to them, when you hear a number, you have to have some basic questions you think about. So like the previous graph that you showed is kind of what I like to look at, and then I'm trying to get them interested in watching for the larger numbers. So the other chart that you have on the coming data thing is interesting. So it makes life easier, just to see what the number is and see what the change is. And so very simple approach in the economic calendar.
So, got it. Yeah.
Okay, is what's coming this week? Which one of these is important? Which is not important? And and that kind of thing. Like crude oil change. I used to trade oil stocks, so that stuff was important to me at 10:30 in the morning.
Yep.
But to understand that crude oil changes, might affect the price of crude oil.
Yep. Exactly. It's pretty myopic and very specific. Absolutely. So this calendar is really good, and having this calendar and being able to select, China as well, and just seeing what are the numbers in China, and going back and being able to click on these is helpful as well.
Cool. Appreciate it. This has been great.
Cool. Well, I know you said your students aren't super active right now, or they're going to be picking up a little bit. So happy to do this again with your students whenever.
We're right. The rest of the semester is focused on. I sent them out to kind of find ETFs, and I sent them out to kind of just do a shopping list, and we'll start, with some parameters and things, and see, and they all said, we're new at this, and I said, well, I'm pushing you to see what you can come up with.
Yeah.
I had a couple of students email me back, and they, I'm like, okay, good, just trying to, there's a little bit of financial literacy in this. There's a little bit of first experience. For me, they're all, they don't have an experience with investing. Some actually, they trade on Robinhood, which is a different discussion.
Yeah.
But I'm telling them that, this is a skill set you're going to need to look at and use as you grow and make money and invest and everything. You need all this kind of, this is going to, this is not like you can learn it and walk away. So they're having a lot of fun. We do a hypothetical portfolio in Google Sheets, and they're all like, can I change my stocks? I said, well, no, we're going to give you one rebalance time. And, so it's really kind of fun to watch. It's different than if you're going to Bentley or Babson and have students that have, investment classes up the yin yang.
Yeah.
They're a different sort of problem. But these guys are, for their lack of access and things, they're really kind of enjoying the program. So it's kind of fun. It's not as formal as some of the other schools are. So
that's also there's no better way to learn the stock market than to actually do it and do it for a long time. So
I keep telling them that every day, every time you make money, and every day you lose some money, or you're losing some money, it's tuition. You're gonna have to suffer paying tuition, no matter how often you do this and how well you do it. I've been doing it 30 plus years. I have a political science degree, so I got lucky in my job. But I find this interesting. I hire somebody to do my own portfolio. I don't do that anymore, but it's kind of fun.
Cool. So. Sounds good.
Appreciate your time.
All right, Rich. Thanks a lot. Talk to you soon.
Take care.
All right. Bye-bye.